Hello and welcome to the webinar today on equity housing, transit, and the next federal reauthorization. My name is Hillary Reeves. I work at Railvolution. I'm just going to do a couple of housekeeping things. With the next slide, I'm going to turn it over to Mark Kudlowitz from the Local Initiative Support Corporation, with thanks to him and to the panelists today. Thanks so much.
Hey everyone, thanks Hillary. Welcome to the Equity Housing, Transit, and the next federal reauthorization webinar. It's a pleasure to be with everyone today. I'm Mark Kudlowitz. I'm a federal policy director at the Local Initiative Support Corporation, or LISC. We're a national affordable housing and community development nonprofit intermediary and work in 36 offices throughout the country supporting affordable housing, community development, transit-oriented development efforts that benefit low-income people and low-income families. Also joined today by Melissa Winkler from Up for Growth. Melissa is the policy and research manager at Up for Growth, and Chris Coase. I was the vice president at Smart Growth America and the director of Locusts here in Washington, D.C. Each of us today are going to be going over transit-oriented development proposals that have been introduced in Congress and given an overview of where the process is at this time. We really want to, just to piggyback off what Hillary said, encourage you to use the Q&A and ask questions. We want this to be as iterative as it can be through the Zoom platform and see the most value add, and really trying to get into the weeds on each of the bills that we'll be discussing, the prospects. And I think what we all want to also stress is the advocacy efforts that each of our organizations, and we all work together as well, are pushing in Congress. Slide that shows the agenda. I'm going to kick it off and give an overview of the transportation reauthorization process and the status, and then each of us will provide an update on TOD legislation that's been introduced. Okay, so surface transportation programs under the FAST Act, which is the current transportation authorization that we're under, were set to expire on September 30th. They were extended for 1 year under the continuing resolution. So that's recently the continuing resolution prorates funding for fiscal year 21 for the federal government.
Mark, I'm sorry to interrupt. You're still going in and out on the audio. I think if you lean in more, that might help. Sorry about that.
No, thanks for letting me know. And if it continues, I can see what I can do here, or kick it to someone else. So the surface transportation programs were set to expire on September 30th, but they've been extended under for 1 year under the continuing resolution that funds the government on a prorated level until December 11th. Lawmakers on at least 6 congressional committees play a role in transportation reauthorization. It's a long process, and we'll go over the committees in both the House and Senate that the process goes through. We did want to note that the TIFIA and RIF program, which are financing programs for transit and railroad, those TOD authorities under those programs were extended under the continuing resolution for an additional year. Those authorities, especially the TIFIA authority, and I believe the RIF, I could be correct on this one, I believe both came about in the FAST Act, the last transportation authorization in 5 years ago. So the key issues that we're facing with Congress, of course, is financing, how to pay for it. Specifically with the Highway Trust Fund, the main source of funding for these programs, for many of these programs, facing insolvency after fiscal year 2021. So work has begun in Congress, but we still, again, don't have a plan to pay for it. The House Democrats, they passed the Moving Forward Act, H.R. 2, and many of you may have saw this, a very far-reaching infrastructure bill that had both transportation and transit portions, but also other infrastructure components tied into it. So the House has kind of gotten further than on the Senate, where only one committee, and we'll go over the other committees that are involved, the Senate Environment and Public Works Committee, passed a reauthorization measure in 2019 that the administration supports. But there's been no movement past that on the Senate side to date. So we've had the House that's really been ambitious, pushed it forward. The Senate has not made as much progress through their committees. And right now we're on a 1 year extension to the end of the federal fiscal year 21. So this slide shows, hopefully in an easy to understand way, the committee structure for both the House and the Senate. And again, this is very important because all the transit-oriented development legislative proposals that we'll be discussing generally are going to touch these committees at one point. So on the House, it's a much more simplified structure. The financing piece is through the Ways and Means Committee, which is typically a tax committee. And then the T&I, or Transportation and Infrastructure Committee, has all the other transportation provisions on highway, transit, rail, and associated programs. So a bill needs to move through the House and a bill needs to move through the Senate. On the Senate side, it's a little more complicated. We just went over that the Environment and Public Works Committee did their portion, passed their piece, but Senate Banking, Housing and Urban Affairs, the Senate Commerce, Science and Transportation, and Senate Finance all have a role in the process and have all not yet had legislation go through their committees. On the banking side, that's mostly on public transportation. On the Commerce and Science and Transportation Committee, it's Safety, Rail, and Freight. And Senate Finance is the House equivalent of Ways and Means, which is the financing portion and typically the tax committee. So this is not uncommon for authorizations to get short-term or even longer-term extensions. Transportation authorizations have to be in place to keep money flowing to state highway and transit agencies in absence of a longer-term law. So it's good that we got the 1-year extension because there'll be no lapse in the authorization, but we still want to push on all the bills that we'll be discussing. So when Congress does act on a longer-term 5-year transportation reauthorization, hopefully we make progress on programs that support equitable transit-oriented development, which is what we really want to discuss. Lapses can cause a lot of problems, including furloughs at transportation agencies and disruptions in projects that have been funded. So this graph here shows the last few federal transportation reauthorizations. And it really should be updated right now at the end to show that just as recently, we have a 1-year extension based on the continuing resolution. So it's a long process, but one that's good for folks to be plugged into. So when there are advocacy opportunities, you can contribute. Okay. Sorry about that. Let me get this back, guys. Okay, so now I'm going to turn it over to Chris for the next slide.
Thank you, Mark. And again, thank you to Revolution for the opportunity to present on this this important topic. And again, I'm always glad to see my colleagues in the TOD space, Mark and Melissa, who are really been champions on Capitol Hill. Having worked on transit-oriented development issues now for the last 10 years, I would just like to first off and say, as Mark pointed out, that the House HR2 bill is by far one of the most comprehensive infrastructure bills that we've seen in my time in transportation. One of these, I would say, I remember working with my coalition of responsible real estate developers, Locust specifically, and going on a Hill and talking about transit-oriented development. And I used to realize during those conversations that TOD used to be a 4-letter word on Capitol Hill. And what you're going to hear today, both through my presentation, Melissa and Mark, is that we have come a long way as a coalition and as an ecosystem around TOD. One of the things that we're going to talk about is some of the key provisions that were included in the Moving Forward Act. And the first one, first provision that I worked very closely on with Congressman Garcia's office and a number of others, was really around the recognition that we need, given a lot of the work that we've seen on the ground, more capacity at USDOT dedicated to promoting equitable TOD. And so one of the provisions that you see here is section 2701. And it's always funny because I'm like, normally we don't ever talk about in codes, but I feel like we could get to do that because I feel like everyone here is going to be transit-oriented development geeks. But essentially the provision does 3 key things. First, it establishes for the first time ever a dedicated office in the Secretary of Transportation dedicated to transit-supported communities. That's a first. Oftentimes, TOD has often been a conversation within FTA. This actually raises the profile of TOD within the Office of the Secretary. Secondly, the office is responsible for doing a couple major things. First, As you know, we have a number of TOD planning grants. This office will coordinate that. But as part of that, the grants themselves will be expanded to not only to address transit-oriented development, but also to deal with things like equity, housing issues, and things of that nature. The second key element that this office will also do is actually begin to coordinate across the entire Department of Transportation all TOD related issues, whether it's in passenger rail, whether it's other mobility issues as well. So I think this is one of the first things that we were really excited about to see, that we have a dedicated office, not just to promote TOD, but actually promote equitable TOD, including affordable housing, climate change, and other issues. And with that, I'm going to turn it over to my colleague, Melissa, to talk about some of the other provisions that we would like to highlight. Melissa?
Thanks, Chris. And I'd also like to say thank you to Railvolution for pulling this together at Up for Growth. And just generally, we're really excited about TOD and excited to see a lot of the provisions that are included in HR2. Up for Growth, we are a coalition of members. We're focused on eliminating barriers to housing. We recognize that there's an extreme housing shortage in the country that's causing both personal and larger economic consequences on budgets. And so we believe that more housing needs to be built, but that this housing, where it's built, is really critical. So connecting housing to transit is a primary focus of Up for Growth. And so it's exciting to see affordable housing provisions included in HR2. Housing and transit have a really symbiotic relationship. Ridership depends on people being able to access transit through living near walk sheds and station areas. So the strength of both the housing and the transit system, they rely on each other. So two important provisions that we see in HR2 around affordable housing are Section 2702, which this provision allows FTA grant recipients to transfer unused land near their station areas or their transit lines to local governments, nonprofits, or other third-party agencies for TOD. So this is important because it builds these partnerships with transit agencies and with local governments and nonprofits, and it also encourages affordable housing, because any housing built through this transferred land has to be 40% of it has to be affordable to people at 60% of area median income or below for 30 years. So that's a really important provision. It builds a lot of new affordable units near transit. It opens up opportunities for communities who rely on transit but are often priced out of the expensive land that happens, in transit walk sheds. Another big affordable housing provision is Section 2703. A lot of the details of this provision come from the Build More Housing Near Transit Act, which I'll talk a little bit more about later. But this section really encourages FTA grant applicants and recipients to work with local land use agencies and to conduct housing feasibility studies. So you can get a warrant for the economic development section of the capital grant, the CGI application, if you conduct these housing feasibility studies. So that aligns where housing can be built and where it will have the biggest impact, so that we can build rail lines in the correct places. It also gives bonus points in the application process to transit agencies that get land use commitments from localities. So that can include things like by right development or other kind of TOD provisions, which is important. It really opens up that conversation with land use authorities and makes TOD and housing kind of primary to the discussion of where to build transit lines. And then finally, and importantly, federal funds that go towards affordable housing can be used as part of the matching funds for FTA recipients, as long as they do fulfill that affordable housing need. So that's it's important, to raise the 50% match for applicants, and then encourages that affordable housing along the rail lines and transit walk sheds. So we're excited to see these housing provisions, and I'll pass it back to Chris for some additional provisions.
So maybe before we go to Chris, to your next one, we had a question come in the Q&A, so we could, again, encourage folks to continue to submit. This is from Teresa. It says, in Phoenix, it seems that the use of public transit has declined since the onset of COVID-19. How will this reduction in use affect funding? So I don't know, I have my own thoughts, but Chris and Melissa, how do you think the current COVID crisis impacts some of the TOD bills that we're discussing?
Very good question. At Smart Growth America, we're home of a number of programs, including Locust, but also Transportation for America. And Transportation for America has been working with a number of agencies across the country to actually work with Congress to actually push a $25 billion emergency relief for transit agencies. We find that it's a huge need for transit agencies across the country. And one of the things I can definitely report, even given the current conversation around COVID, that the House is firmly committed to pushing additional relief dollars to transit agencies. What we also know that if this relief funds are not given this year, that this will be a major contention in the next year after the election. And so one of the things that we highly recommend those on the ground, not to wait for the future infrastructure bill, but actually call your members of Congress now and demand that those $25 billion relief package for transit agencies are a part of the end of the year COVID-19 emergency bill.
Thanks, Chris. If it's okay, we have one other question come in. And the questioner asks, I continue to hear this argument about housing shortages, which I, as a planner and policy researcher, but also as a consultant, find misleading. Based on substantial evidence, we do not have a housing shortage in this country. We have an affordable housing shortage. Transit-oriented development are often targeted for market rate housing, and with so few inclusionary zoning policies or very limited IDPs, transit-rich communities are targeted for development, which leads to low-income populations being displaced, disproportionately impacting communities of color. So my question is, what, if any, have there been proposals for more equitable housing policy for TOD projects?
Very good question, and I know Melissa would like to ping on this as well. That's one of the reasons why we were pushing for the Office of Equitable TOD at USUT, because that is their primary role, to promote more equitable and particularly affordable housing production near existing and new transit lines. One of the key elements, a part of that, is to provide grants and also see other dollars, whether it's pre-development dollars, to affordable housing projects in those communities. So you're absolutely right to identify that one of the key issues that we are hearing here at the federal level is the need to provide more resources and better coordination. And I think one of the things you heard from Melissa is the fact that we're trying to embed, as part of the overall decision-making, affordable housing being part of that conversation. Melissa, I'm sure you have some additional things you want to add to that.
Yeah, thanks, Chris. Yeah, certainly echo everything you just said. I would say also that a lot of the land speculating and the price bidding that happens near transit is a result of there's not being enough housing in these areas, and that pushes the price up, pushes the rents up, pushes people who rely on transit farther away from the systems that they rely on. It increases gentrification and inequality. So we think that the solution to this is to build smarter, to build more housing near transit so that more people have access to it, but also to have these set asides for affordable housing like you see in these two provisions. Certainly, you're not wrong that housing is quite expensive near transit, and that does decline ridership for people who can't access it that way. But our pretty strong working theory is that building more housing generally with specific provisions for affordable housing will help alleviate that problem.
And just to point out, there are more provisions we're going to talk about that go beyond what's included in the infrastructure that would speak to that point as well.
Yeah, and I just want to add to that too. I mean, when you get also on the housing subsidy side, where we need additional subsidy sources to make deals work, each of our organizations, we're really focused on TOD specific bills, and some of these obviously touch on like just discussed. But we're also leading other work on, beefing up the low-income housing tax credit program, additional subsidy sources through existing programs. And you'll hear later about other subsidy sources that we're pitching. For that very point that you're making, it's that we don't have enough subsidy for the demand, both on the operating subsidy side for the properties and on the development subsidies. So we'll talk more about that. We had a couple more questions come in, and we've got plenty of time here, so I'm just going to keep going through these, and we'll get back to, if it seems like a little much, we'll take a pause for a minute. The next one comes in that says, does HR 2, section 2702, which Melissa just discussed, define the parties grantees can transfer properties to? Does it specifically call out or prefer nonprofits, jurisdictions, or is it more open-ended?
I believe it specifically calls out local governments, nonprofits, and then also third-party agencies, which is a little less defined. But as long as they're committed both to that 40% affordability requirement, and I think there's a 5-year public use provision as well in that section of the bill. So I don't know that I would say that it favors local governments and nonprofits, but they're explicitly called out in addition to those third-party.
And I think it's thank you, Melissa, a follow-up question. These are great questions that are coming in, so keep them coming. I think for the previous one about affordable housing shortage near transit, the questioner asked, can you share an example where this theory has been successful? And I think that means where have we seen, if I'm understanding it correctly, where have we seen really strong, equitable TOD housing policies and examples that we could cite?
Well, there are a number, and actually, Mark, this is gonna be an easy layup for you. I know in places like Denver and a couple other middle market, Minneapolis and the like, and also now recently, the Boston Transit Authority have actually not only developed their own equitable TOD plans, which is one of the things that we've noticed for the last several years, has been increasingly a model for transit agencies to actually establish an equitable TOD affordable housing strategy. And from there, they've been working through public-private partnerships because, of course, it's about subsidy. And transit agencies themselves are, as we were even talking, are cash strapped, and oftentimes local governments are cash strapped. So creating affordable housing funds, and I know both LISC and Enterprise have created a number that brought dollars for both philanthropic as well as employers to create these funds that will provide that subsidy. Those are some of the models that I just call out. I bring up the city of Denver as one, as well as Minneapolis, who have done this type of work. But Mark, I know you have some of your colleagues who are doing this work as well.
Yeah, absolutely. There's a number of equitable TOD financing funds that typically community development financial institutions or CDFIs manage. LISC is a national CDFI, I believe we're the largest nonprofit CDFI in the country. And so we'll work in specific markets where we aggregate money from ourselves, we aggregate subsidy from states and localities and from private sources like Chris was talking about. Typically for preservation of existing properties, we don't want to see low-income families displaced. We know this is their second largest expense after housing. So we want them to be able to use transit and avail themselves to be able to meet their own needs and also have higher economic mobility, because we know that regions with more well-developed transportation networks have higher degrees of economic mobility for low-income households. And so we manage funds and we aggregate both public and private for this purpose. Yes, there's activity occurring in Boston, Chicago, Denver, the Bay Area, Los Angeles, and typically CDFIs or a bunch of CDFIs, a bunch of nonprofit mission-based lenders will collaborate. So hopefully that provides a good example. We had another question that came in from Lois that says, what about keeping affordable housing units affordable over time? Knock on first resale after a period of a year.
And that's definitely something we're going to talk about later on in terms of other provisions that we are pushing and have been introduced. So I would definitely want to hold that for the later on in the presentation.
Okay. Well,
yeah, and just to jump on that, sorry, the section 2702, just again, that 40% affordability is for 30 years. So there's at least a 30-year provision. And I know, I think localities also tend to kind of determine their own from like a 30 to a 99-year time, but certainly important, yes.
Yeah, and on the rental housing side, I mean, if it has low-income housing tax credits, it's going to have at least a 30-year period of affordability. certain state housing finance agencies that competitively allocate those credits, especially for new construction, and sometimes for rehab, the affordability use period can even be greater. It's important to note too that how this works with a lot of federal housing programs, that on the low-income housing tax credit side, that the way that the states competitively allocate the credits typically favors on a site selection side that projects, if in an urban area, be near transit. So there's some built-in incentives with some of the other programs that support the development costs. But Chris makes a good point. Let's keep going, because I think some of these questions will be answered, but please keep the questions coming through the Q&A. So I'm gonna kick it back over to Chris.
Thank you, Mark. And this slide is going to talk about the Senate. But before we move to the Senate, there's a couple of things I want to highlight that it dawned on me that we should probably mention. Mark also mentioned as part of the CR, the RIF and TIFIA programs that specifically were carved out to support transit-oriented development were extended for another year. One of the key things that we did see in HR2, the House bill, was the elimination of the sunset provision for the RIF TOD bill program. So for those who've been working around TOD on passenger rail, you know that it was a 5-year provision. It was set to sunset at the end of December 2019. That was then pushed back to this year to 2020. The HR bill removed that sunset provision. So I just want to make sure I call that out before we move to the Senate side. On the Senate version, as Mark pointed out, the Senate EPW committee really, in many ways, was the first out of the gate in really trying to push the infrastructure debate. But as Mark pointed out, they are one of many committees in the Senate. And unfortunately, from Senator McConnell, none of the committees wanted to move forward until they had a green light from not only the Senate Majority Leader, but also the President. And so from that, you didn't see much action, as Mark pointed out. But what are a couple of things that you should be aware of? The bill was called the American Transportation Infrastructure Act of 2019, passed in the mid-July. The bill authorizes about $287 billion. Now, of course, this committee does not have direct jurisdiction over transit and specifically TOD, but it does have the overall authorization to create the structure, and particularly about the formula and how the money is divided over. But a couple of things that we did see in this Senate bill, again, remember the Senate is controlled by Republicans, that I think is worth noting. First, this piece of legislation actually for the first time included pilot programs for climate change, particularly to improve resiliency, reducing road-related carbon emissions, and provided additional funding for alternative fuel charging stations. Why is this important for TOD? Part of those resources for localities, particularly planning associations, NPOs, as well as state DOTs, to rethink how they can address climate change. And that is one of the ways where TOD is now increasingly a part of that conversation. A second key provision that we really push, as you may be aware, that one of the TOD provision in TIFIA is limited to transit-oriented development infrastructure. So your walking, your sewer systems, parking, things of that nature. Unlike RIF, TIFIA is not allowed to be used on commercial and residential projects. For the first time, the Senate actually decided to allow, because of some of the issues we were hearing about the difficulties of promoting affordable housing, and TIFIA has a longer runway in terms of loan capacity. So it's over, instead of your traditional commercial loan or construction loan, which is like 5 to 6 years, TIFIA has a 30-year loan window. So it allows a lot more TOD projects to pencil. So we were excited to see that a Republican-controlled Senate to include commercial and residential projects as an eligible TIFIA project. Now, the next, as I said before, as Mark pointed out, the Senate EPW is the only committee that has gone out the gate. It's been clear that the rest of the committees, the Commerce Committee, the Banking Committee, and Senate Finance is not planning to move on this until after the election. So with that, I think we're going to now go to the next slide to really talk about some of the other provisions and pieces of legislation that have either were incorporated in the House bill or are working on both the Senate side. And so I'm going to discuss a couple. So the first bill that I wanted to bring your attention is to HR 7074, which is called Promoting Equitable TOD Development and mobility corridors. And again, as I said before, this was the base legislation that really served for the creation, as you saw in the base bill, the infrastructure bill, to create that new office for Equitable TOD. It also did two things that I think is really fascinating, and we were really excited about this. And that was, one, it actually for the first time established a income requirement for housing and transportation. So as you know, and if those who work in the affordable housing space, there's a general rule of thumb that no resident, no individual should spend more than 30% of their household income on housing. Unfortunately, there's not a similar provision in the transportation industry. And so this actually created for the first time ever a baseline that as you think about transportation infrastructure, whether it's highway spending, transit spending, or anything else in mobility space, that it should be coordinated, whether it's economic development investments, housing investments, or transportation investments. It should be driving down the cost of housing and transportation for individuals below 45% of their annual or monthly bills. So that was a huge thing. And secondly, if communities, at the state level or at the local level subscribe to that requirement, then they would have the opportunity to have access to a larger suite of investment platforms, increasing bond capacity, access to new grants, and also allows them to designate specific communities that are where their residents spend more than 45% of their household income on housing and transportation to reduce that cost. So again, it was really one of a very forward thinking in terms of connecting housing and transportation, setting a standard, and providing new resources to communities to really drive down that cost, which was fundamentally about promoting more transit-oriented development and more walkability. Next slide. A couple of others that I would just touch upon because I think it really speaks to the fact that unlike for the last 10 years, as we as an ecosystem have been really pushing the need for transit-oriented development, we're beginning to see a lot more bills specifically talk about, if you go to congress.gov and type in transit-oriented development, you'll see that there have been a number of bills in this Congress introduced on the subject. And here's a couple that I'm going to call out. First, there was a bill specifically, HR 5641, incentivizing value capture for Greener Transportation Act. This was sponsored by Congressman DeSange and a number of others. And this actually did two things. One of the things we know about TOD, particularly in terms of promoting affordable housing, is that oftentimes that those land value increases that we see around TOD could be captured and redirected back to either helping support and subsidize public transportation or also affordable housing. One of the things that we found, and talking to a lot of stakeholders, is that value capture policy is not necessarily widely known and actually implemented across the country. And so the first thing this would do is provide technical assistance grants to localities who are interested in creating a value capture policy that will promote greater resources to public transit and affordable housing. And then secondly, unfortunately at the DOT, across all of its current programs, doesn't have a uniform policy when it comes to and standardization of value capture. So this legislation will create that. So to create a uniform standardization across the nation and across the DOT to promote value capture policies around TOD. The second provision legislation that was introduced in this Congress was More TOD Act. And this legislation was introduced by Congressman Anthony Brown from Maryland, and it's actually specifically to the current TOD planning grant program. For those of us who know, the TOD planning grant program came out as a pilot in MAP 21. And it was designed to provide technical assistance grants and planning grants to communities who have planned and future transit assets coming online to think through those connections of housing, transportation, economic development. Unfortunately, what we begin to realize since MAP 21 is that there are so many communities with existing assets that were not eligible to receive those planning grants. And so what this legislation simply does is it expands the eligibility of grantees to not just communities who have stations coming online in the future, but also communities that have existing stations today. Next slide. And the final two things I'm going to talk about before I turn it over to my colleague Melissa, it's about two big issues that we were seeing in the TOD space. First was HR 6175, what we call the Rehab Act. And this was specifically one of the first ever transit-oriented development tax credit ever introduced on Capitol Hill. And this was a bipartisan bill. This was done in collaboration with Congressman Blumenauer and Congressman Kelly. Blumenauer from Portland, Congressman Republican Kelly from the Butler, Pennsylvania area. Also, you had a number of Democrats from New York as well as Michigan sign on to this bill. And this particular tax provision does three things. First, as it was discussed before, one of the things we know when we build new transit lines is that property owners or landowners of existing housing stock, particularly older housing stock, are where normally are the natural occurring affordable housing occurs, right? These are the older buildings, these are garden units, and sometimes the single family units who are getting converted. Oftentimes, these are the first housing units that get converted to market rate or luxury buildings. And so one of the things we wanted to do was provide an incentive to those property owners who have these old buildings to give them the ability to not only rehab those buildings, but actually keep them affordable. And so this particular credit would give buildings that are at least 50 years old, that are within walking distance of transit stations, a 15% rehab credit. Okay, so for the QREs, for the improvement building, you'll get a 15% credit on those QREs. Secondly, if you're, again, a 50-year-old building near public transportation, and you have infrastructure needs, meaning you need to improve the sidewalk. You need to, since you're increasing the density of the project, you need to repair the sewer system, upgrade the water infrastructure, things of that nature. You now, for the first time, would get credit on those infrastructure improvements. And lastly, not only will you get a bonus credit on infrastructure at a 20% level on those QREs, for the projects that are affordable, particularly meeting a 100% AMI average, meaning you can have multiple units, whether it's at 30%, 60%, or 120%. The income average of those units have to be at least 108 AMI. You can get a 25% credit on the QREs associated with those rent-restricted projects. So again, we were really excited to see this. This is bipartisan, and we were planning to see a companion bill introduced on the Senate side. Now, the last provision that the legislation that came out of the Senate was called the TOD advancement of 2019. And as I mentioned before, one of the key challenges that we saw with the RIF program, my organization, Smart Growth America, worked with over 24 TOD projects across the country, particularly those around Amtrak lines and commuter rail lines, close to about $2 billion worth of projects. One of the things we found for those projects going through the process was that there was a lack of clarity. There was no rules from USDOT. Actually, unfortunately, for many project sponsors, they found themselves going into in a dark hole, in a black hole of sorts, of whether or not they could even get a project approved. And so we saw a bipartisan group of senators led by Senator Wicker, a Republican from Mississippi, introduce the TOD advancement bill, which would do a couple of things. One, it would extend the provision, the sunset provision, as I pointed out before. That's a major issue that we were seeing at DOT. Secondly, it would provide clear guidelines of what qualifies as a TOD project. And then lastly, it would force this administration, who, if we're being honest, has been primarily anti-transit, to clearly say, you need to approve TOD projects. So it actually created a time period for like within 90 days that DOT would need to start pushing out TOD loans. One of the reasons why we were really excited about the RIF TOD loan program is that one of the things we know about TOD projects is that it takes a long time to do. You have the infrastructure improvements that could take a couple of years, building the buildings that could take a couple of years, and doing the financing of that. If you've ever seen a TOD capital stack, you know it can go a couple of pages. The RIF TOD loan program actually simplifies that. You can do your commercial residential development, you can do the infrastructure improvement all in one loan, and it can do it over a life cycle of a 30-year repayment schedule. And so again, we saw a lot of opportunity to promote more mixed income, mixed use development, particularly in major markets, also smaller markets. So with that, one of the things we are excited about to see is that these proposals are bipartisan and they cut across the political spectrum. And I think it really speaks to a lot of the work that you in the ecosystem have been really doing, really pushing TOD. And with that, I'll turn it over to Melissa to talk about some of the bills she's been working on. Melissa?
And Chris, before we go to Melissa, if it's okay, if we'll just answer a couple questions and then Melissa, turn it over to you, just so we keep these fresh and have folks chiming in. Robert asks that Amtrak is a major landowner near some key commuter train metros in New York, DC, Chicago. What would be the objections to Amtrak assets being included in section 2702? I don't know if we have an answer for that one. And I think is 2702, Melissa, is that referring to the HR2 provision?
Yeah, it is. I'm not sure if Amtrak, Chris, do you know more about? I think that, yeah, I'm not sure.
Actually, interesting enough, for Amtrak, Amtrak is separate from the the CIG program. And so actually Amtrak in itself does not have a federal requirement on how it should do disposition, but Amtrak, interesting enough, has been very proactive of trying to identify surplus land to convert to TOD projects. And they have clearly been having discussions with, because just so you know, the capital investment grants are for public transportation. Amtrak falls under the Federal Railroad Administration's authority, so that's FTA versus FRA. But FRA has been pushing Amtrak to rethink about how it can maximize its current land holdings. I think you're absolutely right in terms of how can we provide more resources to Amtrak to promote, and that's one of the things about the RIF TOD program that Amtrak is really excited about, is that it allows them to provide resources as part of their public-private partnerships. Like you look at Baltimore Penn Station, that's a classic example of taking access land, creating an opportunity with a developer to do big TOD projects. Hudson Yards is another example of that. And many of those programs are using things like the RIF TOD as well as opportunity zones to really catalyze that. Unfortunately, there's not a direct apples to apples comparison as compared to the Section 277.02 for Amtrak.
Thanks, Chris. Let's get one more question. We'll kick it back to Melissa. Tom asks, have you proposed the use of land value capture in rail corridors rather than TIF and other public subsidies to provide matching funds to leverage the CIG grants under Section 2703?
Melissa, you want to take that, or I can mention something?
Yeah, I think we haven't, but if you have a more insight, Chris, then please go ahead.
Well, one of the things I will say is that under this administration, early on, they actually instituted a series of new guidelines for transit for the CIG program. And one of those guidelines was about encouraging transit agencies to think about value capture on value capture is not like one mechanism. There's different versions of it. And so the administration has been trying to push transit agencies to think about value capture. One of the things that we did working with the Design Office with their value capture legislation was to encourage communities to think about the suite of value capture policies, whether it's land, whether it's TIF, whether it's sales tax, all those things of that nature. So I would say value capture is definitely a conversation that a lot of people want to have. The challenge is, and what we're finding is that there's no federal TIF, right? So the federal government can't come in and say, you're going to do a value capture, it's going to be a federal one. But what the federal government is trying to do, I think the approach that people are kind of coalescing around, providing direct capacity to localities and states to come up with their own value capture mechanisms to do and implement those policies.
Okay, great. We've had a couple more questions, but let's go to Melissa, and then we'll do, I think we've got a couple more slides, and then we'll just answer questions at the end. So please keep them coming.
Okay, great. And I saw a question come through about the 45% of income. So the standard for housing is that households shouldn't spend more than 30% of their income on rent or rental cost, and then 15% towards transportation, which actually kind of leads beautifully into the HR 4307 Build More Housing Near Transit Act. So we find that the average household is in fact spending more than 45% of their income towards housing and transit combined, and that percentage increases for low and moderate income households. So the people who are making the least amount of money are spending kind of the highest percentage of their income on transportation and housing costs. And so part of that we've already discussed, but just to reiterate, the way often now with transit lines, there's a lack of housing in the transit walk sheds, which leads to this land speculation, which leads to renters kind of bidding up for a limited supply of housing, which means that low and moderate income families are often priced out. Even middle income families in really, really expensive markets are priced out of that housing that would connect them better to jobs and amenities. This obviously increases displacement, increases gentrification. It prevents equitable urban growth or even equitable growth outside of urban areas. Transit is a lifeline for a lot of households. I think, there was the question earlier about COVID and transit use during COVID. I think when people start returning to work or to the life pre-COVID, that transit will be even more valuable, especially as we see unemployment rates rise, household budgets lower, people will probably be less able to afford car use. So transit is critically important, both to community development and economic development. And so looking at this problem as to why housing near transit is in such limited supply and is, even though there's high demand, obviously that's why the prices and the rents are so high in these transit walk sheds. We assessed that the way that FTA evaluates these applications is not, doesn't line up correctly with how housing gets developed or built. So housing feasibility assessments are pretty commonly used in the development industry, can predict kind of where people want to live and how housing and other kind of commercial development will happen. And so the Build More Housing Near Transit Act incentivizes FTA grant applicants to use these housing feasibility studies so that they can better lay out their lines to be predictive of where people will live and to better connect housing and transit so that that symbiotic relationship that I talked about earlier can really be fulfilled. It also encourages, so I think a truth is that transit agencies don't control land use policies. They aren't responsible for zoning laws. They aren't responsible for by right development, for permitting, for things like that. And so this, this bill encourages a discussion with the land use agencies, with authorities who are making these kind of decisions, and with transit agencies who are incentivized through their application process to have those discussions beforehand, to get land use commitments for things like by right development. So if an area is zoned appropriately, then it helps standardize and speed up the permitting process. For other kind of TOD provisions, for any other kind of like pro-housing land use policies that, that localities can enact. And then finally, like I mentioned before, the grant applicants are responsible for a percentage of the project cost. And typically that commitment comes from a lot of different places, but the Build More Housing Near Transit Act has evolved to include this, and HR2 section 2703 provision also has it, where community development block grant funds and other federal funds that go specifically towards affordable housing can be used as part of that match. So that's really critically important in encouraging the development of affordable housing, because like the questioner earlier asked, there's clearly a lack of affordable housing in these transit areas, and many populations who use affordable housing also need access to transit. So we're excited to see this bill. It was introduced in the House by Scott Peters of California with Trey Hollingsworth. And we're looking for maybe with the next Congress, a Senate introduction, but this is an important bill. And then second to that is the YIMBY Act, which the Yes in My Backyard Act, for those of you who aren't housing nerds and don't know all the lingo. And this, the House version passed in March. Denny Heck was the lead sponsor of this bill. And, oh, I'm sorry, a Build More Housing Near Transit with Scott Peters and Kathy McMorris Rogers. The YIMBY Act is Denny Heck and Trey Hollingsworth. But this isn't specifically a TOD bill. It requires that community development block grant recipients report on the extent to which their localities are enacting pro-housing land use policies that we see as leading to increased supply of housing and like more equitable housing stock in critical areas. It enumerates 21 land use provisions that the CDBG recipients will have to report on. Two of them, one is TOD zones, which obviously is related to everything we're talking about here today, and then also a reduction in parking requirements and minimums, which generally helps transit succeed, to see less reliance on cars or less space being taken up for parking that's maybe not necessary. And just another note, I had some housing questions. So this presentation obviously focuses more on TOD, but there were some key housing provisions in HR2 that Mark mentioned: LIHTC expansion, the Housing as Infrastructure Act, and then also the Neighborhood Homes Investment Act, which is the neighborhood homes credit, which would go toward rehabilitating vacant or underutilized land. So there are other housing provisions in the bill, which is important to see, but these two focus specifically on the TOD elements.
Okay, thanks, Melissa. Go to the next slide. Yeah, and I just want to reiterate what Melissa just said, that we just briefly touched that HR2 was very ambitious and they included all these other proposals. If you have questions about what's in there as well, on the low-income housing tax credit program, the new markets tax credit program, and Melissa has been really working for a long.
Lean in there, Mark. Thank you.
All right, I'm going to get close. On the Neighborhood Homes Investment Act, these are key programs where we need either the introduction of new resources or an expansion. So be happy to take those questions too. So hopefully folks can hear me. The last slide is on a proposal that LISC has been supporting, which would modify the TIFIA program. I think we've heard about the program a couple times, mostly from Chris. It's a debt program that's typically used in public-private partnerships. It can be used for roads, bridges, surface transportation projects. And like Chris and others have mentioned, it received TOD authority similar to the RIF program in the FAST Act, so 5 years ago. But what we have noticed as CDFIs is that we haven't seen any TOD projects actually been approved from the Department of Transportation. And so Chris mentioned some of the reforms they want to see on the RIF side so that there are clear standards and timelines that DOT is held to when applicants come in with applications for debt. So we have been, looked at this program and put together some legislation with Representative Saulnier, which would open up the TIFIA program for credit-worthy CDFIs. And we discussed earlier about how CDFIs and nonprofit mission-based lenders manage a variety of loan funds, discrete loan funds in different communities. So this would be a new dedicated financing source to support that work. Right now, there's not any federal resources specific for equitable TOD financing. So this would really help with those sort of activities. And the really cool thing is the way we've structured it in the legislation is that a CDFI would apply as a lender to the Department of Transportation. And since we know that they would have a lot of problems being like, hey, what's a CDFI? We're used to a bridge or a road. That's what we typically have underwritten. We have a paid for relationship at the Department of Treasury with the CDFI Fund, which has an over 25-year history of evaluating CDFIs on an annual basis for like new markets tax credits or other financial assistance awards. And so they would help DOT. It would be a delegated loan program where the CDFI could apply for a certain amount of money. Maybe it's approved after they're underwritten as a financial institution. The CDFI would then take that money under a delegated process and would only have to submit to DOT certain regulatory approvals. So the CDFI could take the credit under certain standards that ensure that the money, the credit, is going for affordable housing, community facility projects, or small businesses that are a majority owned by low-income people. So we have overlays under each eligible use to ensure it's being used for an equitable purpose that would benefit low-income families or low-income communities. And so we're really excited about this bill. We are also kind of waiting a little bit to the next session to get it introduced in the Senate. And are really hoping that some of the momentum in the CDFI field and our history of work will help with pushing this proposal forward to open up a new financing source to specifically support these projects. Okay, so I'm going to go, I think we've got a little bit of time here. We've got 5 minutes. So go ahead and take another question. We've got one pending, but if there are other questions, please throw them in the Q&A and we'll do our best to answer them. This question is from Roberto, and it says, are any of these pieces of legislation incentivizing transit agencies to sell or co-develop their land for equitable purposes rather than for market rate or inequitable projects? Are non-commercial projects, e.g. community centers, eligible?
Yeah, I would say as part of section 2702, that's specifically what that is for. So transit agencies can transfer unused land for a multitude of TOD purposes. The housing piece needs to have that 40% affordable for less than 60% of for people making less than 60% of AMI. So the other 60% wouldn't meet those affordability requirements, but that's certainly part of it. And I think within that any kind of mixed use development, so it can be also for commercial purposes. That's how I interpret the bill as transit-oriented development. It's not just housing, but also retail and commercial space.
Yeah. And one of the things that we learned in our conversations with transit agencies that oftentimes it's not just the land that they own, it's the land that's adjacent to them that they don't own, and having the level of collaboration. And that's one of the reasons why the Rehab Act was kind of speaking to that. Is the landowners or property owners who are adjacent to those properties, to give them a greater incentives to create more affordable housing is key. Also, one of the things we're learning in places like Minneapolis who are doing some of these upzoning legislation, that we're increasingly finding that people who are single family homes need resources to upgrade their homes, turn into maybe perhaps duplexes or expand them. And oftentimes there's a gap, and oftentimes transit agencies have nothing to do other than bringing the infrastructure. And so one of the things that we are very mindful of is we got to be holistic in our approach of attracting and creating more mixed income communities beyond just the transit agencies.
Yeah, absolutely. And then the slide we have up right now, where if a transit agency got rid of property to a nonprofit or other developer, again, recognizing that housing were completely undersupplied, low-income families. But we also have a need for other financing supports, typically like in a community facilities definition or how we define it, bill that's up right now, that could include federally qualified community health centers, boys and girls clubs, other community centers that may be using New Markets tax credit, other financing sources. So it's an excellent point. And then Hillary wanted to ping us to say, how would people best track going forward? Again, I think we should all speak to this, but first you have our contact information. And so for each of these bills, there are advocacy efforts that we're all pushing, and we always need more supporters, and we need supporters from all over the country and key districts and key states. So I would recommend folks, at least for the CDFI one or others, we're all working together, to get in contact with each of us and go to each of our websites. But I'll kick it over to Chris and Melissa too.
Melissa, you want to go first?
Sure. Yeah. So like I mentioned before, Up for Growth is a member-driven coalition. We build a lot of coalition support around the bills that we take the lead on, or the other bills that we sign on to. So yeah, I would echo Mark. If you reach out to me, I can connect you to the right people and get you more information about any of these bills. Or also, we would love to see some more sign-on and advocacy. I know a lot of people on this call probably work on a really hyper-local level. Maybe you would engage at the state level as well. And so the federal government can kind of feel scary and like a thing that no one understands. But I can guarantee you that Congress, members of Congress, members of the senators, they love to hear from constituents. They love to hear the issues that are most pressing to your communities. So I think a lot of the questions, brought up really great points of what's happening on the ground. And I think that elevating your voices is what organizations like the three of ours are here to do. And so we'd love to have support and engagement.
Yeah, and I'll just say ditto to everything you said. You can definitely become a member of Spark of America, become a member of Locus. For those of you who are trying to on the front lines of protecting transit, definitely I would highly recommend you join T4's advocacy efforts on the $25 billion. But one of the things I know that Dan Bonfield, CEO of Railvolution, said that we are going to have this conversation more regularly, so you can hear more in a timely fashion some of the efforts that's happening after the election. So stay tuned.
Great. Well, I think we're at time here. Let's see. We've got one more question. So I guess we could quickly try to take it. It says, did you say that the local cost share for transit projects is 50%? How does this compare to highway projects, the cost share?
I see that as long as we're not recorded, I'll just say it's much, much higher in terms of what the federal government will subsidize for federal highways. And increasingly, that's the issue that we're finding across the board of how to address those disparities. A lot of transit funding now is coming from local government, and some of the rules at the federal level could be a hindrance. And so there's a lot of conversation about addressing that as well. So we love to hear from you. If you have thoughts about how we can, through regulation or through statutory changes, please let us know. We need you to tell us some of those pain points. So, but there are conversations around that right now.
Okay, great. Well, thank you, Chris. Thank you, Melissa. Thank you, Railvolution team. Thank you, everybody, for participating today. Again, I believe this PowerPoint will be sent out or made available, which has our contact information. And it was a pleasure to speak to everybody today. So thank you for the opportunity to talk to you.